Are you a new investor and you're trying to decide between Fidelity and Charles Schwab to start your investing? Well, this video is for you. Welcome to the Wealth Twins Show. Let's jump into the differences and help you decide. Go ahead, Nicole.
Well, when it comes to the differences, I think the first difference that I think someone who's trying to choose between Fidelity and Charles Schwab should look at is really the investment choices you have. Now, they both have a wide variety of investment choices that you can do. But when it comes to Fidelity, I give them the edge with this in terms of fractional shares and also funds that don't have fees. So what do I mean by that? Now, when it comes to fractional shares, first off, a fractional share is a percent of one share. So you don't actually have to buy a full share. If you want to buy a part of a share because maybe the price of the share is too expensive, you can actually buy just a percentage of the share, and it can go anywhere as low as $1. So you can basically become invested in a company with just $1. And that's the case when it comes to Fidelity. However, if you do with Charles Schwab, you have to pay at least $5 in order to participate in their fractional shares for their companies.
Now, thinking about fractional shares, with both platforms, you're able to do that. And these are good for people who are just beginning if you're hesitant to put a lot of money in the market. But if you're looking at fractional shares on both platforms, Fidelity allows you to invest in 7,000 different companies, and they allow you to buy fractional shares in ETFs. The difference is on Charles Schwab, you're only able to buy fractional shares in companies that are on the S&P 500. So you have a limited amount of companies that you can invest in on both platforms, but Charles Schwab has a lower amount of companies that you can actually invest in doing fractional shares.
On top of that, like I mentioned before, when it comes to Charles Schwab, not only do you have a smaller universe of companies that you can choose from, you have to buy them in at least $5 increments, which that is not the case on Fidelity's platform.
Now, if I was looking at other investment options, what's interesting is when it comes to cryptocurrency, right? I know a lot of people think cryptocurrency is hot right now. You want to try to start investing in it. On Fidelity, you are able to buy directly Bitcoin, Ethereum, and I forgot what else, but you're able to invest directly into that coin. You're not able to do that on Charles Schwab's platform. On Charles Schwab, you're able to invest in securities that are linked to or related to that coin. So you're able to invest in ETFs that are spot Bitcoin ETFs, right? You're able to invest in an ETF that is based on Ethereum. You're not allowed or you're not able to invest directly into that coin from their platform.
Now, with that difference, I'm not sure if it's a good thing or not when you're dealing with these brokerages, dealing with cryptocurrencies, especially when it comes to beginners, because one, if you understand the history of cryptocurrency, it's not really in alignment with it, but that's a story for another day. If we want to keep this really focused to just beginners, I think if you're trying to invest for yourself at the beginning, I think it's more important for you to look into just single companies or funds. And when it comes to the difference, when it comes to funds between Fidelity and Charles Schwab, I think Fidelity has the edge on that in terms of, not in terms of quantity, but in terms of they have funds in Fidelity called their zero funds that don't have any fees associated with it. We're talking about no trading fees, there's no commission fees, there's no expense ratio. They're truly zero funds, zero expense funds that they have. And Charles Schwab does not have anything like that. Although Charles Schwab has a lot of low-cost funds, they do not have the equivalent of the zero funds that Fidelity does offer.
Everybody knows they both have low cost funds, but if you're looking for something that has absolutely no fees, Fidelity wins out on that. Now, when I'm thinking about what you're able to invest in, when I'm looking at both of these platforms, one of the things I found very interesting is that Fidelity allows you to open up a youth account. And what do I mean by that? Fidelity allows you to open up something called a youth account, which you can start helping your teen invest in. You are able to open an account for a child who is 13 to 17 years old and allow them to start investing on their own, but you also have the ability as a parent or guardian to see what they're doing and have control too. On Charles Schwab, you're not able to do that. The only account that you can open for someone under the age of 18 is a custodial account, right? And you're the one who gets access to this. When it comes to Fidelity, the teen can have access to the app, start learning how to trade on their own before they're an adult, which is good because you get some practice and they understand how to manage their money, but they also get a debit card. So it's linked to savings too. So you're able to use the money in that account. They can start trading with it, and they understand the implications or the consequences of their action when it comes to trading, right? It's real money, and they're doing it on their own, which I think is good practice, especially before turning 18, if you get some practice ahead of time.
I mean, yeah, I like this feature from Fidelity because, yes, it's great. We all want to invest for our children, but really, the only way to do that for a lot of these brokerages is through a custodial account, a UTMA, or the equivalent of that.
Yep.
But you only give control of that custodial account once that person is no longer a minor. So you're the one investing for this minor up into the age of 18 or 21, depending on what state you're in. So they really have, unless they're sitting next to you, they don't know what you're doing. They don't know exactly how to use the platform. And then when you hand it over to them when they become an adult, it might be so foreign to them that it might cause a rough transition. Whereas if you have this teenage account that Fidelity offers, it can smooth out that transition and also makes them a really active participant in their own investment journey and gets them psyched about buying stocks. And it might be their new pastime. So as long as there's some guardrails around it, I'm all in favor of having an account that makes children happy to invest on their own.
If we're looking at another difference, Nicole, what would you say another difference would be between the two platforms?
It would be the platforms themselves. Now,
Okay.
before, if you've seen our other videos, you know that I have both the Fidelity account. I also have a Charles Schwab account, and I used to give the edge to Charles Schwab when it came to ease of navigation and just basically the features on their actual site. And I'm talking about the desktop version of it. But I decided, you know what? Maybe I've been biased. It's been a while. I said, let me look at them both side by side again. And now I really think it's a toss up. They're both kind of beginner friendly, but they're both still, it's a little, how would I say, it's a lot on both pages. So I'm not going to give Charles Schwab the edge anymore. You do have to spend some time on both platforms to understand when things are, but in terms of ease of access or ease of navigation, they're both around the same for me now. The only edge I would give to Charles Schwab is that when it comes to dividends, now this is a topic that might be a little bit further ahead in terms of understanding investments. But when it comes to dividends and it comes to reinvesting these dividends, Charles Schwab makes it much easier to reinvest dividends if you did not do it when you first purchased your investment. So that I will give the platform to Charles Schwab just because of that feature.
Now, I will say, researching this video, I was very anti Fidelity because I saw how hard it was to navigate that site. But as I was going through this, I was like, you know what? I might have to open up a Fidelity account because they have a lot of features that I saw that Charles Schwab does not. For one, they kind of put something in that like replaces Mint. So you can put all your information in and see everything in a snapshot. I can't do that on Charles Schwab. So that's one thing I like also. But if you look at it, they have like a lot of things that Charles Schwab does not have. You can start saving for different goals. You can start doing a plan and budgeting and everything. So I think Charles Schwab has some version of it, but it wasn't as easy to find as it was going on Fidelity. So I think they have a bit edge there when I thought they used to be so complicated for investors. I think they stepped up their game. I think they took some feedback from their customers and they're making it easy and they're trying to go after new retail investors, right? Another thing I like or I saw a difference between the two platforms.
They're both still a little busy for me, but they both
Are busy, but I think if you're serious about investing on your own, I think if you take the time, you can learn each platform. It's not that hard or that steep
it's
of a
not
learning curve.
prohibitive. Yeah.
Yeah. One thing I saw as a big difference is that savings accounts. Like let's say you're investing in the stock market and you don't invest all your cash, right? You have cash sitting in your account. Now maybe you're waiting to save up enough in order to buy a full share of something, or you're just putting it there and you haven't decided on what you're going to invest in. Fidelity has that you can sweep that money over into a money market account and get like a 4% or a little bit over 4% interest on your money. Charles Schwab stopped that cash, that money market fund sweep overnight, right? You can't do that anymore. So when it comes to like having options to do with your cash, and then when I say option, having choices what to do with your cash that is sitting in your brokerage account, Fidelity has more options when it comes to that. You can have it in the money market sweep account, or you can have it in I think it's a regular sweep account where they'll sweep it over to different banks within their program overnight. And I think the interest rate on that is like 2%. But when comes to Charles Schwab, you have their investor savings account is like, I think it's paying 0.15%. And then you have their investing checking account, which is paying 0.05%. So the interest rates they're paying on your money sitting in an account is not very good. But you want to look at that if you keep a lot of cash sitting in your account before you make investments, right? If you don't choose one of those savings accounts or those cash management options on Fidelity, you're going to make 0.00% on your money or the cash that's sitting in those accounts before it's invested.
I think another difference that may not be that obvious, but especially when it comes to being a beginner, is actually branch locations. When I was doing the research, it turns out that Charles Schwab actually has twice as many physical locations where you can actually go in to their shop and speak to someone than Fidelity does. So it's around 400 for Charles Schwab. Maybe I'm off, but it's basically like half when it comes to
That's true.
Fidelity.
I
Now,
haven't seen a Fidelity branch in a long time. I guess I haven't been looking for them, but I see Charles Schwab more often. So that's true.
you just activated your reticular I don't know, cortex somewhere in the brain. Now you're going to be seeing Fidelity locations all
Maybe
over
I
the
will
place
see
because you
Fidelity
did
all
that.
over the place.
You activated your lizard brain. Anyway, so the thing is that a lot of the people that we teach when it comes to investing prefer actually going in to a location, maybe to hand off a check or so. We've had students that have told us that. And if you're that type that actually want to actually bring in a check to maybe fund your account, then maybe that's where Charles Schwab has a bit of an advantage when it comes to that.
I would agree with that. And it's very easy. Well, let's say you cannot bring cash into any of these branches and expect them to put it into your account. Okay.
Don't
Has to
bring
be a
cash,
check.
guys.
Don't bring cash. Write a check and then they will deposit that check into your account. If I was thinking about it, I think I might have missed something. Is if you have cash and you're trying to make a direct deposit or you're putting it on an automatic basis, the next step would be to automate investing into something, right? There's a difference between investing automatically and getting cash moved into your brokerage account. But then a lot of people miss the next step, which is actually automating your investing into an actual security, right? You can automate investing into ETFs on Fidelity's platform. You cannot do that on Charles Schwab unless you're dealing with their robo-advisor. So if their intelligent portfolios or something like that. You cannot do it automatically on Charles Schwab to automatically invest in ETFs. That is one advantage I see that Fidelity does have over Charles Schwab. When it comes to being a beginner investor, if you want to take yourself out of the equation and you want to automate your ETF investing, that's a plus on the Fidelity side.
I mean, I wouldn't even call it a beginner investor. If you
Sure.
just want to automate your investing, having the ability to do that with ETFs, that is a big advantage. Now, I would say both brokerages do not allow you to do automated investing when it comes to single stocks. Okay, so we're talking about funds here. And Charles Schwab does allow you to do automated investing when it comes to index funds. But when it comes to ETFs, which are exchange traded funds, only as of now, Fidelity allows you to automate that. Now, you brought up the idea of robo-advisors. So let's just get into that. Robo-advisor is using the company's AI tool to basically pick your investments and then rebalance your portfolio and basically
Create a
manage
portfolio for you based on your risk
exactly, and then manage it for you. So both companies provide robo-advisor services, but Fidelity does not have a minimum for you to actually use it. Now, when it comes to Charles Schwab, you have to invest at least 5,000 with them before you're able to use the robo-advisors. I'm not really a fan of robo-advisors. I'm not sure how Nadia feels. I like to be in control of it.
I've never used a robo advisor because I like having the control over my money and rebalancing my account. That's me. I think that everyone should because no one's going to care more about your money than you do. So I think
True.
everybody should have the ability to invest on their own, know what their investments are, and how to rebalance it because at the end of the day, you're the one who has to deal with the decisions that are made with your money.
Yeah. At the end of the day, I don't care if it's a robo-advisor or a financial advisor.
Mm-hmm.
When it comes to advising, if you don't know what's in your account and you don't know why you have it or why it was chosen for you, then you're at a disadvantage. So it's always a reason why you should know how to invest on your own and how to do these things, and then maybe use those services if you want as an extra. But it should not be the default. That's the way we feel.
Yep. Advising is advice. It should not be the final decision unless you agree with it. All right. So if you're also new to investing and you're looking for help from these platforms, you might want to be aware of the fees they charge when you want someone to help you out and do stuff for you. Nicole, what did you find when it came to fees with that extra help?
Well, there's definitely some differences in terms of fees and using their representatives or broker-related questions. For Charles Schwab, they charge you basically a standard fee of $25 for someone to help you with a trade, right? Because you could do this on your own. When it comes to Fidelity, it was kind of interesting trying to figure out exactly what the fees were. One, for maybe uh, single company trades, it'll be about 19.95. But when you're talking about mutual funds, that fee went up from 100 to even up to $250 depending on the transaction. So I thought that was interesting. So Charles Schwab, when it comes to fees for related help from their representative, that flat rate of $25, and I could be wrong. If someone wants to check me on that, fine. But all I could find was a $25 fee, where when it came to Fidelity, the fees were a little bit more confusing in terms of help.
Now, I just want to clarify that fee structure, right? We're not saying you can't get on the phone and speak to someone in customer service and you're going to be charged a fee. That's not
They
it.
both have live customer
You
service.
have live customer service. The fee comes in when you have them book the trade for you, okay? That's when that fee comes in. So you can speak to them, get all the information you need in order to book the trade on your own. But once you get them to do it for you, that's when the fee plays into effect.
So, Nadia, is there a clear winner when it comes to this? Is it Fidelity? Is it Charles Schwab? Can you go wrong with either one? What are you thinking?
I think as a beginner, you can't go wrong with either one. But I think as a long-term Charles Schwab customer, I'm kind of swayed right now to start trying out Fidelity. Like before I was completely against it. Like, I'm not even gonna deal with it. I saw my husband seen his account, I seen Nicole's account. I was like, that's too busy and complicated for me. I don't want to do that. But they have added in a lot of stuff that I'm going to look into. So I think everyone do your own research, see which one you're more comfortable with. If you like having more branches and having someone to talk to in person, maybe that's the thing that might sway you going towards Charles Schwab. But if you like the other stuff that we discussed, I think it's kind of even, but there's a little more on Fidelity side when it comes to choosing it. So I think it's up to the individual. You can't go wrong with either one, though.
Yeah, I also think maybe it's also ease for you, right? You can open up an account in both. But maybe if your retirement account is associated with one, maybe it'll be easier for you to open up a brokerage account with that same company.
Yeah.
Or, like Nadia said, those other things might sway you. All right. So you can't go wrong with either one at the end of the day. It's just a matter of personal preferences. But I really hope that the differences that we highlighted helped you in some way. And if so, it would be great if you can leave us a like, share this video with someone you care about, and also subscribe to our newsletter, which we have the link down in the description below, which is our Wealth Pack newsletter, where we go more in depth in terms of money, investing, and financial literacy, that whole gambit, where we promise when we write these emails to you on a weekly basis, which is just once a week, we actually make sure that we give you the information that we believe is very important, and we break it down in easy to understand terms and easy to understand ways.
Yep.
And that's
And we
exactly
get
what
you
we
thinking
do.
with these emails too, asking yourself questions that you may not have been asking.
Yep. So if that's something you're interested in, again, the link to our Wealth Pack is down in the description below. And with that, can't wait for you to see the next video.
See you in the next video.